During this session, we're going to take a look at several different investment objectives, such as preservation of capital, income, growth, and middle of the road, such as growth and income. When an investor is seeking preservation of capital and or liquidity, they are wanting to invest in something that's usually very secure and very short term. So preservation of capital means I don't want to lose my principal. I don't want to lose the money I have, while liquidity means that I need to have my money sooner rather than later. I'm expecting to buy a home in the next 6 months, and I don't want to pay a lot of sales charge, and I don't want to pay redemption fees, right? So with liquidity, we look at something like a high-grade short-term corporate money market fund, or a short-term U.S. Treasury money market fund, or a short-term high-grade municipal money market fund, which is triple tax-free if the investor is in a high tax bracket occasionally, right? Only high income earners are going to benefit from a tax-free money market fund. So we always look for an investor who's in a high tax bracket for municipal high-grade bond funds. Another thing to consider when we're looking at a money market fund is they will always try to have a fund that has an NAV of $1. And remember, a rep cannot guarantee a money market fund will maintain its stated goal of $1 per share. There have been some funds in the past that have had some commercial papers default, and their NAV is actually 99 cents. We may see that on the test. Another objective is current income. Current income that is derived from investing in primarily debt instruments. So if we're a conservative income investor, we should look at a U.S. government bond fund. If we're wanting monthly income, we should invest in Ginnie Mae. And if we're looking to diversify in debt, we'd want to look at a bond that invests in corporations, municipals, and U.S. government debt instruments. So if you need current income and you're in a low tax bracket, that means the investor is less concerned with his federally taxable income. And we'd probably put this investor in an investment-grade corporate bond fund, a Ginnie Mae fund, or a real estate investment trust, a REIT. If you have somebody who's in a high tax bracket, usually it's 28% or higher, they are really concerned about their income that's federally taxed. They want tax-free income. This is the type of investor that we'd put in a tax-free municipal high-grade bond fund or a tax-free money market fund. Remember, your income tax bracket has a major effect on the strategies that the registered representative will use to help the client. The next objective is capital appreciation or growth. So clients who are willing to accept some risk tolerance for growth, they don't need to have current income. These are younger, aggressive investors. They're very patient, they're long-term, they're okay with waiting years and years before withdrawing their funds and for their investments to bear fruit. So remember, with a growth fund investor, we're going to concentrate in investing them into common stock growth funds, aggressive growth stock funds, aggressive mutual funds, and supplemental savings. Variable contracts with very good sub-account mix would be a good option for this investor as well if they're looking to supplement their retirement income. What about our middle-of-the-road investor? Middle of the road wants to bake their cake and eat it as well. They have multiple objectives like growth and income. They want a specific ratio of stocks or bonds and a certain amount of growth. So different types of investments that would be middle of the road would be growth and income funds, balanced funds, convertible bond funds, equity funds, and life cycle funds. And that's it for our chapter, you guys. During this session, we've talked about our primary goal of preservation of capital, looking for income, looking for growth, and we looked at middle of the road, balanced funds, and growth and income funds. This concludes our session, guys. Go over to millionairesintraining.com and do our practice exams. Practice hard and pass your exams. I'm Colin Kleck, and I'll see you in the next chapter.